Congratulations on yet another green day with the ARCa Bulls trading team. We have nailed all of the targets we have mentioned, and we are certainly not done, so consider joining the team today. We have closed at a critical resistance, and the downside may start again. Let's see where our historical signal is sitting. Welcome back to the channel on this Freaky Friday. This is ARCa, and let's dive into ticker symbol TSLA. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol TSLA. And what we're observing here is actually the hourly chart. But what I want to mention to you first is that there is still critical news coming out for Tesla, right? So go ahead and take a look at this. Tesla to halt production in Germany as Red Sea conflict hits supply chains. So there is a consistent amount of negative news coming out, right? Aside from scrutiny on the Tesla truck, all kinds of stuff, man. So let's go ahead and take a look at the charts here and see what else is going on. So I want to remind you guys that we were speaking of this inflection point right here, right? So this inflection was critically important for the bulls to maintain, or else the bears would take over this. As you can see here, we have clearly broken beneath that and have started on this immediate descent, right? So I expressed how dangerous it was for the bulls to fail this area here, and price action is likely to lead on a continuation to the downside. Okay, so let's go ahead and now look at the position on the hourly chart. Okay, team, so what we're observing here is actually the price action ending up closing right below the linear regression band, right? So that means that we may be able to find here a slight upside into the area of about 219.10, maybe even 219.13 before completely getting rejected from this mid band, right? So if that is the case, team, then we are set to continue on a downside continuation here into the targets of possibly, I mean, this is going to be completely guessed here, right? But yeah, it could be around 215, 20. I would say around 215, 22, right around there, right? So if it is going to be that 215.22, then what else is there, right? So in fact, we've actually used that 215 level as an inflection point before, right? So 215.22 is actually very close to the 4-spot 618 at 215.44. So let's just go ahead and keep that in mind here as a discretionary target for us to evaluate, or for us to observe as we come into the next trading session, right? I think 215.21, that's fine. To the top side of this, or to the bottom side of this 4-spot 618 Fibonacci ratio of 215.44. All right, team, so that's currently what I'm observing here. That is the path to the downside that we could be observing. And actually, I could point out something quite interesting here, actually. Let's see. I may be able to do it in an immediate short term as well. Okay. Yeah, there could be a massive fake out happening right right now, right? So this is what you're observing here is actually bear pennant, right? And it's getting a slight, it's already at invalidation here, but it is getting a breakout right from that 80%, potentially 90%, right? So, or 85%, sorry. And you're getting that test and a continuation to the upside. So I have a feeling here that if we get a 30-minute closure beneath the 219.50, actually 219.51, very similar to the hourly, then this is set to fail and continue on to the downside here, right? Because that 219.50, that 219.35 here, or 51, whatever we were looking at, that could be showing a range, and that's because of the top of the breakdown here, right? So 219.51. Let's mark it down like this, right? And we have the top side of this triangle right up in here, right at around 219.84. And that can introduce, a pretty intense rejection, since it is the inflection point that we just broke to fall beneath into this area here. And it's also the top of the range right here, that 219. Okay, so yeah, let's go ahead and kind of speculate on that potential, right? But remember, team, that this is a short-term move, one of which that we're currently observing. But The actual move, the one that we're really looking forward to, and I know that a lot of people are going to be asking me, right? It's actually part of the buy daily volatility versus momentum or stochastic momentum backtest, right? This is the critical backtest that we were running to gain some perspective over the present situation here for a downside move. Okay, so if you don't know what I'm speaking of, then let's go ahead and find out. Anytime that volatility has contracted into these zones here, right, into the critical contraction zone within the 15 percentile, I have taken a back test of any time that that has happened, right? Where we break out both volatility component and moving average beyond the 15% with an upside pivot, alongside stochastic momentum with a downside pivot, right? And I've taken note of every single iteration throughout the entire trading history of the asset in the buy daily time frame for us to gain an edge over what's to come, right? So, uh, in this time frame, there are a total of 35 iterations, of which 29 were guessed correctly to the downside. That is giving us an average downside accuracy of 82.86% with an average breakdown of about a 14.7% move to the downside. Okay. And I have also calculated, you know what? I'm tired of looking at this here, right? But I'm gonna go ahead and adjust it right now. Just know that a lot of these metrics are gonna have to be adjusted like this, right? So it's definitely minus, right? Because we're talking about a back test for the downside here, and we definitely want to make sure that we're not uh, confusing this, right? So, and honestly, the other side here, see how I have a negative value that's actually it's just entirely unusable, right? So we're just gonna go ahead and leave this as not usable. And same, and also this is gonna be a decline metric there. And this one will also be a decline metric and an unusable lower bound of the third standard deviation. Right, there we go. So now we have it complete, so that I can not make any weird little corrections here as I speak. So 68% of the results on a standard distribution curve, like the bell curve, you're landing at a decline of minus 9.90%. And just in case we move beyond just in case we move beyond the minus 4.8 and the minus 9.90, we have the minus 14.70, right? Uh, in order for us to evaluate a continuation from that, I have also calculated the upper bounds and lower bounds of the first, second, and third standard deviations, right? So that's going to give us these reads here. Just in case we move beyond this target here, we would be ready. Okay, so uh, what I can tell you is that the signal is still not fired, but upon the closure of yesterday's buy daily candle and the closure of today's price action, the volatility component is about 90, I would say above 90% fired. The signal is just about 90% fired. And why can I say that? Remember the condition here. The criteria is absolutely anytime that volatility has expanded with an upside pivot alongside the moving average. So you can see here that this iteration is measured as soon as we break with an upside pivot. This iteration here is breaking right above the 15% with an upside pivot. And I don't even have to show you all of them, right? I am absolutely critically tight when it comes to those conditions, right? It's because I'm not gonna try to force a trade here. The data is the data, and we have to take it the way it is. So if we observe the current situation, the current moment, please take a look at this. The volatility component has clearly exited the 15 percentile, and the moving average is well on its way as well. So this is why I'm saying that we're over 90% fired the signal. As and my idea here is that if there is a continuation on a 24-hour market trading to the downside, then volatility is going to start to expand even harder. So that means that there could be a complete break of this 15 percentile come Tuesday, right? So know for a fact that as soon as we start pivoting towards the downside and re-entering into this area here, if we come out and we re-enter, that's an invalidation of the signal. We have to start all over. Okay, so it is important and it is imperative that we break out with both of the moving average and the spectre and the volatility component with an upside pivot. Okay, team. But yeah, I mean, my bias is towards the Bears here, right? I've been talking about this play for quite a good while now, and I do believe that there could be a continuation to this downside. Okay, team. So definitely, be aware of what I'm talking about here, right? As there are some pressures that can lead to a continuation to the downside ultimately, right? So 3 hour time frame here on the RSI is looking like it's suggesting a continuation to the upside, but very, very, very conditionally, right? So let me show you what I mean by that. As soon as we get this upside on a 3 hour time frame, we are very likely to resist from the SMA 14. But not only that, is that we would resist from the SMA 14 and the gravitational zone. Okay, team. So just know that that would be bearish. It's a rejection. Okay, team. So yeah, I think. One more thing I want to remind you of, team. Please remember that we are actually killing, absolutely murdering these trades every single day in the guided plays in the ARCa Bulls trading Discord. Okay, so please go ahead and consider joining. I'm gonna put a link at the top right of your screen here. It's at about 11:23 right now, right? So we'll put it right in there so that you can click on it and join the ARCa Bulls trading team and trade alongside me and other great traders uh, from before market open. All right, so I highly recommend that. And one more thing, if it gets to enough people here, there are still some requests coming in, even though I have fulfilled the 30 seats for the ARC Masters Trading Course and the 17-week mentorship program that I will never repeat again. I think I can squeeze in 4 more seats. So if you want to go ahead and do that, reach out to me, and I will try to fit you in. And that's going to be at arcmasterscourse@gmail.com. Okay, team. So I'll go ahead and open up 4 more seats, but I don't think I can really go beyond that because then there's going to be some server latency. But yeah, reach out to me at arcmasterscourse@gmail.com because I will never repeat this 17-week mentorship program again. This is definitely my last one, as now I am firing up the Discord. We're actually trading actively and we're making some moves together. Okay, team. So I'm going to go ahead and dedicate the time to trading as much as I can. All right. So you know the risks, you know the downside here, and you know the play. Yeah. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very, very good extended weekend, and I will catch you at the bell on Tuesday. Adios, team.